All right, how's it going, everybody? Today's video, I'm going to be going over futures because everybody has been seeing me trading futures. You know, me posting on Instagram, my site about futures. So I started getting into the future market about 6 months ago. I already had a general idea of what futures were, but I just never used it as a trading vehicle to start actually trading. But I believe that we're in a time where trading stocks at this point is not as lucrative as trading futures. Right, the leverage that's given in future market is incredible. So in this video, I'll be providing a general overview of the futures market. And as well as descriptions of some of the instruments, or like I call them different trading vehicles. So we'll see. I'll show you guys that there are a lot of future contracts that cover a lot of different classes of investment. Whether it's the stock index, gold, oil, silver, copper. So it's almost like impossible to go over everything. In this video, I'll only be showing what I trade personally, what I feel like there's a value to. Now, a lot of people, a lot of top traders, they utilize the future market. They hedge their investment positions in the market. I'm more of a speculator. I speculate. I do a lot of speculation because in a sense, I day trade the contracts. Sometimes I'll take a swing at them, like I did recently. I did a swing on natural gas, and I did a swing on copper. As if you would have saw my videos that I posted before, I did a little explaining as far as charts go. All right, you guys are gonna have to excuse me because I'm watching. I'm actually right now. I'm currently short silver at 17.29. We're at 17.19 right now. I'll be looking to cover very soon. Okay, so you guys want to know how futures work, right? So futures are nothing like the stock market. They're nothing like stocks. They're actually completely different. If you were to compare them to anything, I would say you would compare them to options, except they're better than options because options lose value. Okay, the options lose value. Future contracts don't. Okay, unless obviously the contract value, the price goes up and down. Whereas if you were, let's say you were in a call on an option and you were bullish on the stock, so you bought the stock's options, you bought calls, the stock could go up, but you'd still be losing because options are more time, there's more time sensitivity in option market than futures. So futures, the future market, when someone says they're trading futures, all they're doing is trading a contract. It's a contract, okay, of an underlying index commodity. So if somebody says I trade futures, I trade the future market, I trade, let's say, I trade gold. Okay, he's trading or she's trading the contracts to gold. Okay, gold movement, when you see gold move, like right now you see gold move. By the way, I just covered at 1790. So if you're seeing gold move right now, it's 1275, 75, and it's going down. The movement is being created from the futures market because gold, silver, copper, and everything else, even the market, they move, okay, according to the future, right? So the contracts usually are always a month ahead. So as of right now, when we trade, we're trading, for example, let's say the silver and gold, we're trading the July contracts, right? So you're always trading a month ahead. We don't care about what the spot price is. We're trading, basically speculating on what the future price is going to be. Hence, it's future trading. A lot of traders, for example, they'll trade different stocks from different sectors, and a lot of traders don't even understand that. Right? So they'll say that they'll trade, let's say, like Abercrombie and Under Armour, and then they'll be trading, you know, I don't know, like any oil company, or they'll be trading Tesla, for example. These two are in two different sectors, right? So they're two different. They move completely different. Futures is if you have a deep understanding and you have knowledge, certain, you know, basic, fundamental, and strong knowledge of, let's say, oil. Like me, I like oil, I trade oil, but I understand oil from a fundamental purpose. I understand how oil moves. I understand what the importance of oil is. So I've done a lot of research regarding oil. So that's why with me, it's pretty lucrative to just trade oil. You're trading, let's say if you have been trading stocks for a very long time, or not even a long time, just in general, and you want to get into the futures market, then you would be trading, you know, you could trade the actual S&P 500. Everybody speaks about the S&P 500, you know. So let's say, okay, you feel a lot of traders, they trade Apple because they believe, let's say they're short Apple. They're short Apple because they believe the S&P 500 is going to go down. Well, okay, so that makes sense. But a lot of people, I think, don't realize that instead of shorting Apple because you believe the S&P 500 is going to tank, right, you can make 20 times the amount you would make with shorting Apple if you would have just short the S&P 500 itself. So with the future market, it enables you to actually short the S&P 500 by itself. You can short or go long on the NASDAQ. Okay, you can trade the actual Dow Jones. Here you can trade the Nikkei, which is Japanese, which I've traded many times. You can actually trade, buy, and sell the U.S. dollar contracts, right? Which I will be shorting soon. You can trade the euro as well. When we talk about Forex, it's a little different than the future market, but they have similarities, right? But you can trade the US dollar without trading Forex. It's confusing because a lot of Forex traders, they trade the US dollar against Japan or Japan against the US dollar. But if you like the US dollar alone, and you're uncomfortable trading it against another currency, which is like me, I don't like trading one currency against another currency. I rather just trade the currency itself. And that's why I trade the US dollar. As far as commodities, you can trade any commodity. There's a lot of commodities that you guys probably don't even know you can trade. Okay, there's traders out there that trade rice, that trade wheat, that trade soybean, that trade live cattle, like cow. Okay, they trade live cattle. You can trade, obviously, oil, which you see me post a lot. You can trade the copper, the precious metals. So you got gold, silver. You can trade natural gas, coffee, and here I'll give you. Let's see. I like investing.com because it just gives me everything. I don't have to create my own watch list. It's all right here. So you go to investing.com, you can pull up the commodities. Everything here is futures, right? Then you got the bonds and the Forex. By the way, let's take the bonds. Okay, the 10 year is sitting dead at the 10-year. It's at support, dead support right now. So I'm watching the bond market very closely. So yeah, so you can trade all of these. Everything that you see to your left side right here, they are tradable in the futures market. Only problem is, for example, I trade my futures via Thinkorswim, which is TD Ameritrade. I trade with them, right? And I trade with TD Ameritrade. So TD Ameritrade kind of limits you to the different type of commodities or indices and indexes that you can trade. So if let's say you're a trader, and let's say you went to school or whatever, and you can own a farm, your family owns a farm, and you understand the fundamentals and what drives, let's say, cocoa beans, right? You would, before you open up a broker, you would have to find a broker that trades cocoa beans, right? Cocoa. So these are a list of everything. I trade orange juice. I have orange juice. Actually, if you guys saw my Instagram, on a high watch. It's at a certain level where it's very undecisive. I'm not ready yet to take a position on orange juice. But if you guys saw my Instagram, pretty much explained what's going on with orange juice. You can trade lean hogs, feeder cattle, lumber, oats, sugar. Everything's tradable, because why? And then a lot of people ask, why are these tradable? These are tradable because these will never go away. We will always have sugar. Sugar will never not be a necessity. Natural gas, oil, gasoline, copper. These are things that we need. These are needs as a part of the whole world. We can never just say, okay, we're not going to use copper. The world is too much invested in copper, even though you'll see price fluctuations and everything. So now let's say, let's backtrack. So basically, I was explaining futures as a resemblance to options. Right? When you trade futures, for example, we're going to stick to one thing. So let's talk about gold. Right? You're trading gold, and you want to trade gold. Gold goes under different contracts. So if you go to investing.com, this is why I'm screen sharing with you guys. You can see this. You click on the contracts right here, and you'll see all the different contracts, right? Every contract here, and I'm going to give you guys an example because I spoke about this in the chat room, right? The spot price, which is cash, which is actually right now the worth of gold, right? If you were to go to a jeweler, spot price for gold right now is $1273.61. That is the spot price for gold. You will not trade spot price. Hence why this is the future market. We're trading futures. We're trading a future later date contract. We're trading June, right? We're not trading June because we are in June. So you always want to trade a contract that is a month to 2 months ahead of the month that we're at right now. So you see the July contract has 92 volume. Most of the traders right now are trading the August contract, which is August is in 2 months. Again, future, that's where the futures market, the word futures comes into play, right? We're trading the future market, future price. These will expire just like option contracts. Just like option contracts, you can roll over the contract. So if you buy, let's say today you buy the July contract at $12.74, right? Let's say we're buying the July contract at $12.74, and you want to be bullish like I am. I think we're gonna break $1,300 within a month or two, right? So if you're like me, you're long gold. July contract at $12.74. So let's say the day before the contract ends, you're profitable and you don't want to take profits. You just want to roll over the contract. You can just simply, with your broker, press the rollover button, and you can roll over and continue your position, right? And just continue riding it out, which is the beautiful thing about options. You could just continue to ride out the contract. Just continue to ride it out. The difference between stocks is stocks don't have an expiration date. The only time they'll expire is if they just stop trading. They go bankrupt. These will never expire. The only thing that will expire is the month, and then they'll just continue to roll over, right? So Another good thing about future market, where a lot of people, they ask me, how can I get over the day trading policy, the PDT, the pattern day trading, right? When you trade stocks, which now I just think it's a complete waste of time. You're trading stocks, so you have less than 25,000. So United States, in the U.S. exchange, stock market, United States stock market, they need the FINRA, as far as regulations goes, you need 25,000. This was implemented, I believe, in 2001, if I'm not mistaken. This law passed in effect, and so you need 25,000. So common sense says most of the people that get into trading, one, don't have 25,000 and just sit there and put in a broker's account. Two, they do have 25,000, but why would they put 25,000 in the market when they don't fully understand the market, right? So with futures market, you can get around that, because if you're trading futures, there is no PDT. There is no limitations as to how many contracts you can trade on an intraday. You can trade as many contracts as you want, which I don't recommend, obviously, but unless you're scalping, but you can trade as many times as you want with futures. There is no limitations. They don't tell you, you can only trade 3 contracts every 5 days. Just like stocks, you can do 3 trades every 5 business days. So that we don't have that in the future market, which makes it very lucrative, because if you buy a contract and you sell a contract for a profit, you're sitting on the sidelines, and then you see another opportunity, and then you day trader, you're not going to get penalized. Whereas a lot of people trade stocks, they'll buy stock, sell a stock, they'll sit on the sidelines, then they'll see a profitable play. So they're like, okay, I have to take this play because I see profits within this play. So they'll buy and sell it again, and they'll do it again, and then boom, now you have a violation. Now your account is pretty much locked, and for I think 90 days or 90 days. So you don't have that problem in the future market. Another reason why I like the future market is because of the leverage. Leverage resembles almost like the option world, right? So when you trade options, you understand what I mean by leverage. So with the leverage within the future market is very good, but it's good and bad, because if you're on the profitable side, it's very good. If you're on the losing side, it's very bad, right? To trade futures, you obviously need to be approved by whatever broker you're using, because it is used by margin. You're using margin. You need to be margin enabled to trade the futures. So when you say futures, I want you guys to think of contracts. Don't think of the word future, just because a lot of people just get confused. So just think of contracts. But it is not like options, though. Okay, they're similar, but not quite close the same. Why I think trading futures is very good is because there's not much manipulation in the future market as there is in stocks. Right? You can't have a pump and dump, let's say, in the future market. But you'll always have a trader that says everything is manipulated, right? I call those the sour traders, right? Yes, certain stuff is manipulated. Like, let's say oil. Okay, oil is manipulated. It's not the price. It's not the future market. It's not the contracts that's manipulated. The future market is not manipulated. It's just oil in general is manipulated. It's not the stock. It's not the stock. It's not the S&P 500 contracts that are manipulated. It is actually the whole entire market that's manipulated, right? Whereas in stocks, you can't say that. The whole stock market is manipulated in itself, but certain stocks are manipulated as well, right? So you won't have a pump and dump. You can have a pump and dump. You're not going to have a pump and dump. You can have a pump and dump, let's say, on, thinly traded contracts like, orange juice, which I think that's what's happening right now. I think one fund is controlling orange juice right now, just by the volume. But you can't pump and dump the S&P 500 contracts, right? Because the S&P 500 contracts, they move side by side with the actual S&P 500 index, right? So in the future market, we call it the E-minis, because it's a mini mini vehicle of the actual S&P 500. You can't pump and dump the U.S. dollar because the contracts follow the U.S. dollar. So if the U.S. dollar gets pumped and dumped, then yes, the contracts will follow suit. So the future market is not manipulated. You don't have to worry about manipulation, but it is not as regulated as the stock market, right? So it's less regulated because it's not because they don't care about the future market. It's because of this reason. You can't. It's very limited as to insider trading and manipulation in the future market. The only time you'll see insider trading is which happens every day, right? Is hedgers, right? So if you own an oil company, the insides and the outs of oil prices. So that's the only time you'll see. I call that insider trading, but it's legal because they're just hedging their business, right? So let me see. So yeah, so to backtrack, futures differ in several ways from, again, any other financial instrument like stocks, options. The value of the future contracts is determined by the movement of something else. So gold is going to follow the actual index, right? The contract itself has no value, right? So if you can buy 1,000 E-mini contracts, the contract itself has no value. Whereas if you buy a stock, it has some type of cash value, right? I forgot. I think Apple has like $60 or $50 cash value. I forgot what their value is. Whereas the contracts don't. You make money on the price fluctuation. There is no value to it. Like I said before, futures have a finite life. Unlike stocks, they can stay in existence forever unless they go bankrupt. The future contract has an expiration date. Every month it will expire. It's just like clockwork, right? So you will have to be on top of that. Usually you will get a notification by your broker. So if you're holding a certain contract and it's going to roll over, they'll give you a warning and say either sell or roll over your contract. Hence, like I said, trading futures. The difference between stocks and the future market, because of the leverage, right? Market direction, the timing, your call is very important. It's crucial, right? So a lot of people say, well, Jibs, why don't you throw out more videos all the time? It's like every time you throw a video, like natural gas, copper, gold, you're always making these great calls. And I tell people, well, because making that call is very important because of the timing issue, right? I don't want to call something too early, because calling something too early when you're trading contracts, it can have a negative outcome if you're into play. For example, right? Let's say you're in oil. Let's say I'm just throw out a price, right? So let's say you're in oil at $50, right? And you buy it, and you're thinking, okay, it's gonna go to 51. Okay, you could be correct. It'll go to 51, but you have to make sure it's not going to 48 first. Because if it goes to 48 and then goes back to 50 and then hits 51, by the time it hits 48, your account might not have enough leverage capital, okay, to withstand oil going to 48. Because if you have, let's say you're holding 2 contracts of oil at 50 and it goes to 48, you're down 4,000. Right, you're down 4,000. If you're down 4,000 of your actual capital, you might not. They might close you out. You might get a margin call. So your account might not withstand, it going to 48. So when you trade futures, you should always keep that in mind, right? Leverage is good when you're making money, but it's also bad when you're losing money. So some people can't ride out a certain commodity because of that. So if you have to keep that in mind at all times, do I have enough value in my account? And again, I'll go over that. This video is just general me going over what futures market is. Each video that I will put forward going forward now with futures, it will get more intense, more complicated. This is pretty much just basic stuff, me just talking top of my head. But yeah, you have to make sure your account is you have enough funds to ride it out. Or else you will blow your account up, even if you made the right call. So again, the timing is very crucial. You have to make your timing very important. So a third difference is the third difference is going to be you trade stocks to make, let's say, if you're, because you know who you are if you're viewing this video. If you're somebody that's used to making $300 PLs, $300 a trade, $200, $400 a trade, you're using, I'm explaining what the leverage is. You're using, if you're trading a $50 stock, right, and you're buying 1,000 shares, you need $50,000 to trade that stock, because it's $50. So $50 times 1,000 is 50,000, right? And you're going for 1 point to make $1,000. You need $50,000 to make $1,000, right? Whereas if you trade oil, so let me backtrack. So you need $50,000 to trade a $50 stock to make $1,000 on 1 point. Now we're going to look at futures, right? And I will entail this later on in the video. If you trade oil, again, it's going to vary with broker. TD Ameritrade, I think you need like $3,900 worth of capital to trade a contract of oil. I can make $1,000 by trading oil. If oil goes from $48 to $49, a $1 jump in oil, I will make $1,000 with one contract, and all I needed was $3,900. So that in itself should sell it to you guys. You have to understand. So when you're out there on Instagram or on websites trying to find somebody to follow trades, do you have $50,000 to sit there and follow somebody that's making a dollar play on stock that's $50, that you need $50,000? Or would it make more sense to trade something that you need a less capital, make the same amount of profit? And that's why I think that's where risk management comes into play, where that's why I said I'm trading future markets right now. I'm not trading the actual stock market, because I'm just not a believer in the stock market right now. So I'd rather trade in the index itself, the actual index itself. All right, so I'm going to put on the screen all of the different tickers that you can trade, and the indices that I trade. Actually, I'm going to keep it as what I trade. By the way, I also have a chat room. You guys can go in the chat room. I just, you can contact me on Instagram. I can add you on the chat, and you'll be able to see, live calls. Usually I trade. Oh, another thing before I move forward. Another beneficial thing about the future market is, a lot of people say, James, how are you trading all these different times a day? I'm like, well, all right, so I'm a night person. So it's like I trade the future market night late. That's why when you see posts being made 11 o'clock, 12, 1, 2, 3, 4 in the morning, I'm trading the market at that time, right? You can trade, for example, oil. You can trade oil. Let's say you as a trader, you don't trade the future market. So you're trading oil. The only time you can trade oil, first of all, the only way you can trade oil is either an oil company, right? Or the oil fund, or an ETF that's tracking oil like DWTI or UWTI, right? That's the only way you're going to be trading oil. Whereas me, a future trader, I can trade oil 23 hours a day. Oil can be traded 23 hours a day. The only time the pit is closed for future traders, for the actual traders, is from 5 p.m. Eastern Standard Time to 6 p.m. Eastern Standard Time. Any other time besides that, you can be trading oil. You can trade oil 23 hours a day, right? Does it make sense for you to buy and trade DWTI from pre-market to, let's not even count pre-market. So let's say 9:30 to 4 p.m. Eastern Time, right? And you're holding that DWTI, right, overnight. Whereas you can trade oil during our stock market trading hours, right? During our trading hours, and then you can actually trade it when it's closed, right? So it would make more sense being able to trade overnight, because when that overnight action happens, and most of the time, if you're a future trader, you see the quote on oil, the most volatile movements happen during the night, because you got different countries trading. You have the Asian market, you have Europe, Germany, you have everybody trading. They'll decide what's going to happen, for those hours, what's going to happen to oil. So by the time, you're holding DWTI overnight, you have no control over it. You can't buy or sell your position. So you pretty much have to withstand and take and accept whatever price oil is at when it opens up the next day. It's very dangerous. That's why you should at least, learn future market for that reason, or if you're long a stock and all of a sudden the market starts dropping, you want to be able to hedge that stock position. If you're in big, you're in with 4,000 or 5,000 shares overnight. We all do it. So it's like you're holding overnight 4,000 shares. All of a sudden the market starts to give out. You want to be able to hop on the computer and start shorting the market to make up for your losses that's going to incur when the market opens up. So it's very, very important that you guys, take the steps to actually learning the future market. It's very important, right? All right, so I said that I was going to post the tickers, right? Because probably the most confusing part about futures, which a lot of people, they contact me, they ask me, well, how much do you make with futures, right? It all varies. It's not like stocks where if you own 1,000 shares of a stock and it moves $1, you make $1,000. It's completely different with the future market, because every single commodity or index meaning like a whole market, like the S&P or the Dow or the NASDAQ, for each, let's look this up, right? Let's look at this. So the S&P is at 2,079.25, right? For every 25-cent move, you're making it's worth $12.50. So if this goes up to 2,080.25, you've made $50. So for every dollar move in the S&P, it's $50. All right. Now you're probably like, what? That's a lot of money. Yeah. So remember when the S&P was at 1,800 in January? Imagine going long on one contract, making 2,000 points, right, on the S&P. 2,000 points. I'm sorry, 200 points. So yeah, that's a lot of money, right? And that's why it makes sense. And it's very lucrative for you guys to learn. This is why I'm advocating for the future market. And again, this first video right here, I'm just explaining to you guys, what the future market is. I'm not really going to explain to you, it's not really for you guys to get out there and start trading. No, because you have to start from the basics. That's why this video is called Basics. I want to show you everything that's tradable, and you as a trader, you're going to make the decision as to what type of future trader you are. There's a lot of different future traders. You know, there's oil future traders, there's oil traders, I know traders that just trade. This is how I got into coffee. I know traders that trade just strictly coffee, right? Big contracts in coffee, and they're just timing the market's direction. That's it. So if you're somebody that understands the fundamentals of the market, right, and you want to short the market at, you know, we're at 2080, we were at 2100, we couldn't make the new highs. So if you're somebody that's really bearish on the market like I am, you know, why are you going to trade stocks? Just trade the actual S&P 500, you know. But it's a whole different animal, right? And that's why I said, you know, you guys got to take your time and don't rush into it. Also, just like stocks, you can paper trade futures, right? And after this video, you know, if you guys have time, you know, if you guys have Thinkorswim, you guys probably have, you know, your paper trade account. Start paper trading futures. Look at the essence. All right, let's go to a commodity, right? I covered silver too early. I got 10 cents on silver. I covered too early. I covered at 17.19. It hit 17.13. Wow. And I started my positions too early. But right. So after this video is done, get a paper trading account. Look at the chart, because if you're watching this, you should at least know the basics of charting, right? So if you say, okay, I think silver is gonna hit this support right here at $17 on a 15-minute, right? 15-minute support, clean support too. This is a sexy support. Look at that sexy support on the. That's another reason why I like the future market, because the charts are so clean, right? Would have been a no-brainer to take a long right here. Simple chart right here. Oh, you guys are, yeah. So you got a paper trading account. You know, you got the basics. $17 support on the 15-minute chart, and then whatever, you pull up your 13-minute chart, and we're sitting at a support line on the 30-minute chart. And I'm actually gonna go long. I'm gonna place an order on silver. You guys are watching it live. I'm placing a long order at 17.15. Going to go long on silver, right? So then you pull up the 30-minute chart. I know it's kind of a little sloppy, but just trying to, and you see support. So you're like, okay, screw it. I'm gonna go long 17.18. I'm gonna swing this out. I'm gonna go for a profit target of 17.21, right? Well, so that's 19, 20, 21. So if you were to ride out 17.18, okay, to 17.21, right? You're gonna make 150 bucks a contract. 150 bucks for every 3 cents. Not bad, right? So as here, you see the action that happened. You would have made a lot of $150 PLs just riding this chop right here. So right now, I'm going to give you guys the ticker symbols. I'm going to give you guys the ticker symbols and the tick value of each thing that I trade. So just bear with me and give me a moment. And I want you guys to, after I write this down for you guys, to screenshot it. Never to ask me again what the tickers are and the tick value is. Okay, I'm gonna write this down. I want you guys either to write this down, it's very important, or at the end of this, take a picture, upload it to your computer, upload it to your platform, so when you trade, you understand. If you don't understand the numbers right here, do not trade the future market, because before, when you trade, you have to understand the tick value, okay, of the ticker. You have to, it's very tricky. It's not like stocks, right? Some tickers, some indices or commodities, literally for every 0.005, there's money to be made, right? And I got triggered. I am long silver at 15.5, by the way. I'll have a stop loss set. I don't know what my stop loss set will be at, but I'm long 15.5 right now silver. I'm probably going to swing it as long as we hold this level right here. It's all going to depend on gold. And I'm a gold bug. All right, so let's let me pull up the pages right here. Bam, bam, bam. Okay. This is something that I wrote up before. So I think they should still be valid, but they might be trading under a different name. But I'll explain what I mean in a second, right? So OJN 6 is orange juice, right? If you want to trade orange juice, this is the ticker to trade it. You can look this up on your Thinkorswim platform. Some of you guys don't even have a platform yet, and that's why I'm writing this out for you. This is sugar, right? KCN 6, that's coffee. Let me just do this. This is cocoa, however you guys want to say it. This is cotton. ZSN6. This is soybean. Yes, and you can trade all of these. Pretty cool. This is corn. This is wheat. You guys work at Chipotle. You guys can trade some wheat. This is my favorite, one of my favorite ones right here, copper. You always see me putting up the HG. I just went long on this one right here. Sin 6, silver. One of my favorite ones, gold. And one of my another favorite ones, which is oil. Another favorite of mine is natural gas. LEM6, something on my watch list, is live cattle. ZB, okay, is a 30-year treasury bond. Do not trade these two things. If you don't understand what a bond is, don't trade this. And if you're not a really good technical, charter, if you don't have your technical analysis on point, do not trade these, okay? These right here, the bonds. Before you trade bonds, understand bonds. I talked to a lot of people about bonds, and I was amazed of the different answers that I got when I questioned people what bonds are. Bonds are very important to understand. I think anybody that trades the market has to understand bonds, because bonds do does influence the stock market, okay? Sometimes the bond market is able to predict certain events before the market catches up. So this is going, so the first one right there up top was the 30-year treasury bond. This is the 2-year treasury bond, okay? This is the 5-year treasury bond. And this is going to be this is what I posted up on my Instagram, I think 2 days ago. This is the 10-year treasury bond. If you guys pull up the 10-year treasury bond, we're sitting on literally dead on support right now. And we started off the session in red. Okay, so I got to pull up my live running chart on that as well. Okay, and then these are some serious features to be trading. The YM is the Dow Jones, okay? I wouldn't recommend trading the, well, you know what? Yeah, I wouldn't recommend trading the Dow Jones in itself because you're trading the whole 17,000, whatever it is right now. You're trading the whole ticker, right? You're trading the actual Dow Jones future price. Every dollar the Dow Jones moves, it's a $5 tick, meaning that you either win your profit $5 or you lose $5, right? So you got a lot of different, you know, sometimes you have $200, $300, $400 swings on the Dow Jones. You multiply that by 5. That's how much people are making per contract. So there are future traders out there that are trading 10 contracts, 20 contracts, making $200, $300 on the Dow swing. They're bringing in around 15, 20,000 a day. They don't trade every day. They just wait on the setup. They wait on the setup, right? That's the type of trader that I've become, whereas I'm not really day trading too much. I'm looking for the intraday movements, but I'm focusing on the big move, just like I did with gold, just like I did with natural gas, just like I did with copper. Copper was sitting at $2 before we hit 214. Natural gas was at 202 before we rolled over to 218, and we hit 260, 267, 264. Right, where I finally sold my long position that I posted on Instagram about 2-3 weeks ago. That's the swings that you want to take, that you want to start taking, because day trading, watching it every day, watching the price fluctuation every day, you're really not gonna. You might think you know where the price is, but when you're watching the price every day, you're losing you're losing the big picture. You're losing the movement, and you become lost, and you really don't understand where the movement is, because all you care about is the intraday tick. So then you got the ES, right? The ES, which is the E-mini. You can trade the S&P live, like I said. Okay, you got the NASDAQ. NASDAQ is a I think, if I'm not mistaken, it's $5 tick as well. And then you can trade the VIX, right? For you T-VIX lovers, you can actually trade the VIX, right? For each dollar that it go, well, I'll tell you guys later. All right, so I'll write this down real quick. This is coffee, okay? This is US. This is US. Okay, this is Cocoa US. I'm putting US because you guys probably don't know, obviously, if you're watching, but they have London coffee and they have US coffee. I don't even know anything about the London coffee. All I care about is the US coffee because I'm from the US. That's what I'm going to trade, right? So these are the tickers that we're going to use as US traders to trade cotton, cocoa, or coffee. I'm putting all these up. It doesn't mean that you're going to have to sit here and look and research every single one. Don't be one of those traders that try to trade the whole world, right? Pick 2 things, 3 things, right? Always when I first started trading, what my mentor had told me is learn 2 things first. What you're going to learn is 2 things that don't correlate. They actually move differently, right? You pick one that goes up and one that goes down, a pair that moves separately from each other. That's what you're going to do. I did take his advice in the beginning, but now I trade things that move similar. So a lot of people say, well, if you trade gold, why do you trade silver, right? Well, because sometimes things outperform other things, right? Even if they move together. For example, oil, we just hit 1737.5 on silver. Just at the open bell, silver was outperforming gold. That's why I do it, because I'm looking at the chart. I rather, I'm keeping track of two things, but if something's going to outperform another ticker, I'm obviously going to jump in on that, right? It only makes sense. But when you first start getting into trading futures, try to trade things that move separately. For example, if you want to be an oil trader, right? Because everybody loves trading oil. You want to trade oil and you want to understand the dollar. Why? Because when the dollar goes up, oil goes down. When the dollar goes down, oil goes up, right? They move separately. They move against each other, right? Sometimes you're going to have days where they both go up, and sometimes you're going to have days where they both go down, and that's the tricky days. Most of the time, when there's a power move in the dollar, oil is going to go down. Again, when we opened up, the dollar continued to run up. As I posted in the chat, I said the dollar, I had posted in the chat where I think the dollar was at 94.15 if you guys pull it up on a 30-minute chart. Once it 94.11 or 94.15, once it breaks that, it's a breakout. It's an obvious breakout. It went down, completely tanked from 95 all the way to 93, mid 93. So we're just due for a bounce. So we're still breaking up. Breaking out. I didn't really check after that. So yeah, so you want to learn two pairs like that move against each other, right? So this is corn, wheat, right? This is copper. Again, if you guys have Thinkorswim, you can copy this, or you can actually go on your platform and it'll give you a whole list of what Thinkorswim, what TD Ameritrade will actually allow you to trade, right? Give me 1 second. I'm just trying to. All right, so I'm up 2 cents on silver as we speak right now. I told you guys that I was going to get filled at 17.15. I got filled at 17.15.5. I'm going to hold this right into a swing. I'm going to have a stop loss. I set a stop loss on my phone. Again, most of the trades that I execute, I look at the chart on my computer, execute through the phone. I'm going to keep a stop loss on silver at 17.11. I'm still long at 17.15.5. Right? And no, that's not insider trading. All right. Okay. Where are we at? Silver, gold. Oil. Natural gas. 30-year trade. And a lot of you guys asked me on Instagram when I posted how the 10-year Treasury bond was at the support. I was not actually looking to short. Right now, I don't really have a direction. I was just saying to keep a close eye, but I wouldn't mind going long on the 10-year Treasury bond just because we're at a multiple, I think it's like a decade or more than that year support. Right, so this is a good support if you're doing long-term investment, in my opinion, 5-10 years down the road. Because you ever heard the phrase diversify your bonds? Yeah, well, bonds are very good in a sense too. They're very slow movement. Right? They're not risk. There's not much risk in them unless there's a crash. Right now, it would be a little risky, but I wouldn't mind going long on the 10-year Treasury bond for a short-term swing. But I haven't queued that yet. I haven't executed that trade yet. Right. This is the NASDAQ, and this is the S&P 500 VIX. Right. This is what you're going to trade when the market collapses. because this thing is going to go through the roof. So we're going to call this ticker symbol, right? We're going to call this the description. We're going to call this the value, right? 1 point equals 150. What does that mean? 1 point. Well, orange juice is sitting at 168, right? So if it goes to 169 and everything is under a contract, we're talking one contract. You can trade more than one contract if you like. I'm basing it off the one contract, right? Because I'm assuming that you guys are new trading this, so I don't expect you guys to trade with 10 contracts first. You know, so we're going to base everything under a one contract rule. So we're trading one contract at $150. I'm sorry, for every point it's 150. So if orange juice is sitting at 168, we move a point, it's at $150 now. Right? You made $150 for a contract every time orange juice moves a dollar. Okay. Same thing with sugar. Okay. Except sugar is a lot more volatile, right? So it's sitting at 1 point. 1 point equals $1,120. Right? 1 point is 375. I'm going to stop writing 1 point. You guys get the point, but I'm going to just type in the tick value. Okay, so for 1 point of that is $10. This is $100. This is $5,000. $5,000. Take wait. 375 on 375. Yen is 5 grand. Wheat is 5,000 as well. I never traded wheat. Okay, I'm just showing you guys what you can trade. There's a lot more stuff that you can trade, but this is on my watch list. Okay, this is why I like copper, and this is why I'm saying that copper. For every dollar, copper's sitting at $2 right now. And it keeps bouncing off my support, by the way. Remember, you guys, if you check my video before this one, 2 videos before this one, I made a whole video on copper. I said that the 201 level, 202 level on copper is going to be major support. The only way it'll break is 2 things. China completely takes a shit, or if the United States takes a shit. That's the only time we're gonna hit the January low, which I think was 193. And then we're talking the 7-year low after that, which is we're sitting at the low, which was the financial crisis low, right? So that's why I said looking into copper, if you need 3 grand, you know what I mean, like 2 grand, I think worth of margin. If you guys have a long-term account, again, I'm not telling you guys what to trade. I'm not giving you guys any advice, but that's why I said that taking a bite into copper at $2, when you can make a move to $3, I mean, you make $25,000. That's your day trading account right there. If you can manage to make $1, or if you can scalp within the whole month, if you say you're a good day trader, if you can manage to scalp $1 worth of copper, let's say in 10 different trades, you make $25,000 on that. That's why I like that, right? Silver is not that much. It's not as much. Silver, for every dollar it moves, is 5,000, right? When gold, everybody was freaking out and they were saying, "Oh, okay, gold's going back to $1,000 an ounce." Blah blah blah. Silver, I was trading silver at 1603, smacking myself in the head for not going long, even though I went long, by the way, on gold. 2 contracts, 1209, sold 1271, made a salary at that trade. I'm smacking myself in the head for not going long on silver because it made $1.30 move since we had that huge pullback in gold, and in silver it was like 1601. Right, so 2 or 3 contracts, I would have made 15 grand on that. That's why it's very serious. That's why I love this market. So for every dollar that gold moves, it's $100. For every dollar that oil moves, it's $1,000. For every dollar that natural gas moves, it's 10,000, right? For every dollar that cattle moves, it's 400. For treasury bond, for every point is 1,000, which doesn't happen too often. This is 2,000. This is 1,000. This is 1,000. Dow Jones for every take, so 17,001. That's 5 cents, right? So it could be a little dangerous. You get trapped in a wild swing. The ES for every point, so if it's at 2080 and it goes to 2081, it's $50 a point. Everything, assuming that we're trading only one contract, right? So that's everything that I trade. So when I trade, let's say I say I'm trading copper, you guys are gonna go look at HGN6 and see that I'm trading copper, right? Now, OJ is for orange juice, SB is sugar, KC is coffee, right? HG is copper, the CL is oil, LE is cattle. The letters after that, okay, are signifying the months. Right? Hope that makes sense. So the N could be for July, the M could be for June, and so forth. If you guys want to know the different names, let's say for the contract, right, what you would do is, like I said, go to investing.com, go to the contracts, and it'll give you all the ticker symbols, or you can do that with your platform. Worst to worst, if you don't, another thing that I tell a lot of people is, they'll sit here and ask a lot of questions to different people, like on Instagram, or try to research it. That's why you have a broker that you don't have to pay for. If there's any information that you need when it comes to trading, right, or you want to look a ticker up and you don't have the time or you don't have the patience to look it up, just give a call to your broker, right? That's what they're there for. Sitting at a desk, people that can't trade for shit, but all they can do is just answer phone calls. That's why they're there. So you give them a call and you ask them, what's the ticker to this? That's what they get paid for. So always utilize them as well. But this is the basic. So these are, like I said, that's the months. So I kind of didn't write them out right here. And I got stopped out of silver, by the way, at 1711. I'll probably go back long again if it retests at 1715. Okay, there's a lot of. All right. Okay, so as far as the brokers go, depends where you're from, right? So I get viewers from like overseas, then I get United States viewers. The best broker that I've heard about, okay, that again, I haven't used them live, is NinjaTrader. Supposedly because of the commissions, their execution. I downloaded it, okay? I downloaded their platform. I don't really like their platforms. I'm in love with the Thinkorswim platform. It's free. I gotta pay, and it's probably the best platform out there, right? I like their execution because they have a mobile app. That's the only reason why I didn't get NinjaTrader, not because they suck. They're a very great broker. But it's a turnoff when I can't trade on my phone. I trade by phone. Like I said, I look at the chart on the screen. And then I execute all my trades on the phone. I never had a slippage. I never had a problem. It works for me. My phone, to me, is very fast, and I like it, and that's why I use it, right? So personally, I recommend Thinkorswim. But if you're starting on the light side as far as capital, you want to trade. You want to use NinjaTrader. if you're looking at a commission thing and you don't care, if you're one of those traders, look at this shit. Silver jumps right back up. I got a order to fill at 17.14 on silver. Okay, long. Okay, so then I would go with NinjaTrader. If you're a trader that doesn't believe in mobile trading and you're a trader that only trades on a laptop or a desktop, then go ahead and use NinjaTrader. Better commissions. I personally use Thinkorswim. I would go over all of the brokers with you guys, but it's just so time consuming. Literally, what you guys would do, right? And it's just so amazing that so many people don't use Google. Like, you guys got to use Google as your best friend. Seriously, right? You just type in future trading brokers, right? Literally, that's it. And then you look them up. If you got questions, give them a call, and they'll speak with you. Again, I think one of the best ones is NinjaTrader. Then we got Thinkorswim. Thinkorswim is really is an equity platform and an option platform. Not so much for future trading, even though they do future trades. I never had a problem with them. It's just to just traders that only trade futures. To them, they just wouldn't recommend Thinkorswim. Me, I just want to be available to everything, and I'm so used to Thinkorswim. I got my fees lower, knocked down a bit, so that's why I stuck with them. I can't really complain, right? As far as charting goes, I use Thinkorswim. Most of the time on Instagram, you'll see that I use investing.com. Investing.com, I love. It's just so simple. Their charting is so simple. And that's why I use investing.com as well sometimes. So let's go over this. So this is why a lot of people say, well, how'd you make so much money on this one trade? And so oil, right? So one contract, if it moves $1, you get $1,000. Goes 48. So imagine those, and oil price was moved by hedge funds, by the way. I don't know if you're a hedge fund and you're listening. I know it was you guys. But so yeah, so hedge funds bought like $100,000 worth of contracts at $27, right? Now oil hit 50. So you know how much money they made, right? That's why they did that run, because it's very profitable. It was very profitable, right? But now let's say you're a scalper, right? You're one of those traders that loves that 5-minute chart. You love trying to pick out the tops and bottoms. You one of those traders that you guys believe you're an algo trader. You say you move like an algo. Then you go with 2-3 contracts. If you're scalping oil, right? If you're making 10 cents, you go 3 contracts, you make $300 for every 10-cent move on oil. Your day, so oil moves 10 cents when the market is open. Oil moves 10 cents within 10 minutes. So if you're on the right side of the trade, and by the way, I am long, again, silver 17.14 was triggered. If you're one of those 5-minute charts, so you could use 3 contracts for every 10-cent oil moves, you're making $300. And then, if you're, like I said, if you're one of those traders that aims for $300, which is great, nothing wrong with that. Don't be one of those traders that want to make $2,000 a day. Don't do that, because you do $200 a day. Add that up every trading day. There's 252 trading days a year. Do 200 times that. It's more than a salary most people, right? So don't focus on that $1,000 bullshit. Just focus on $200-$300. 10-cent move on oil will net you that if you go 3 contracts. Even if you go with 1 contract, you nail oil for 10 cents. That's 100. You wait an hour, 2 hours, and then you can short it or go long again. Another 10 cents. Boom, that's another $100. I make it sound simple, but that's reality, right? For every 10 cents, you're making $1. For every 10-cent move, you're making $100. Right? With the ES as well, if you're a swing trader, so you want to place a swing, a nice swing, tight stop, nice swing. S&P. S&P was a sweet short at 214. I wish I hadn't covered. I had covered my position. Kind of slapped myself for that, but whatever. Another thing, the front months, right? I give you guys something that people did not notice, right? They didn't notice it. I didn't notice it till it happened. And if I did notice it, I would have been short. Rule of thumb in future contracts, right? This is a tip. The future front month contract, July, August, September, October, November, every front month after that. So every month, right? So the August contract should be worth more, should be ticking higher than the July contract. The December contract right now should be the most expensive contract in gold right now, right? When a front month starts to trade under the spot price, so earlier in this video I said the spot price for gold right now is $12.73, right? If the July contract is trading at $12.72 or $12.71, we know that the market believes that that particular commodity or index is going to go down and pull back. For example, the ES, a lot of traders are like, wow, the S&P gapped down. It didn't really gap down, and I know sometimes it's confusing. There was a rollover, and that's what I explained before. The contracts roll over. We stop trading that month, that June month, and we're trading in the July contract. So we were trading at 214. The rollover is exactly what stopped that whole, the S&P is going to break new highs, blah, 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 right? Because the current month that the S&P, the E-mini was trading lower than prior, signified that we believe that the price of the S&P 500 is going to go down. All right, that's why you see that big gap down from 1214 to, I think it was like 1290 or something like that, 2090, if I'm not mistaken. 20. So it was like 2114 gap down to 2095. I don't know. You can look at the chart, but that signified that. And then sure enough, we hit like 2079 afterwards. So that's also a tip and advice. Sometimes, most of the 99.9%, it always works. When the month ahead is trading lower, it's going to be a little nice pullback. We're expecting a nice drop. That's what it usually means. That's why we always say the future contract should always be trading higher than what we're currently trading at. So that's the tip, and that was really the indication in the future market that the S&P was going to go down. Now we're right back to square one. So I don't really know of any catalyst that could bring back the S&P back to 2118. So yeah, that's pretty much it. So this video was just to go over features, what it is, explain to you guys what it is, what trading features is. The next video, I'm not really gonna do a lot of talking. The next video is actually gonna be me live trading, right? So I'm not gonna talk. I'm gonna do live trading. And I am going to pull up my Thinkorswim live account, right, on the screen share. I'm going to show you guys how I got my platform set up on my future side. And my next video, we're going to do some charting, how I chart, my simple way of charting, support and resistance. Like I said right here, which was a clear, let me pull you out of the screen right here. Right, so we're looking at the 30-minute candles here. That means in 30 minutes, so each candle is 30 minutes worth of trading, right? It looks like a lot, but it's really not a lot, right? It's really condensed, right? So This is like a week's worth of action. 30, each candle is 30 minutes, right? So we pull this right here. Again, there's different ways of trading. I'm a support resistance guy. Again, I will go over this in the next video of how to actually trade futures. Because each video, I'm going to do 5 series video on this. This is just the basic video, simple. You see that right there, right? When was this created? This was on the 9th of June. Right? Today, we are the 12th of June. You see here, we broke it. And then you see where the candle started again, right here. 30-minute support is holding. Rule of thumb, what I would do is as soon as that candle, if that candle, the next 30-minute candle, if it goes green, go long. I'm already long 17.14 again. I was long at 17.15, stopped out at 17.11, went back long at 17.14, and I'm holding, right? Now my stop loss is going to be set at 17.10 because then that would signify that's a new low after I stopped out, right? So 17.10 is going to be my stop loss, right? Let me show you something else, right? A lot of people say it's all coincidence. It's not a coincidence, right? You know, this is how I see things, right? Then this little wick, right, long wick, tried to get tested, but we didn't test it. This is, so this right here is all in a day's worth. See that? Right? I don't even know of any catalysts that are that is due. Let's see. China's industrial production is due at 11. Which is soon. And then we got unemployment rate, but that's for a miscellaneous country. All right, so yeah, I'm gonna take this swing here because that's holding. You know, it's holding. We should at least bear flag on a 30-minute at least, which would bring us to around here, 1722 area, right? But I think that, you know, we're gonna go to like right here, right? But that was a reason why I went short, like I said at the beginning of the video. Again, was because this 37 topped out. That's why I wait. That's why I don't trade in between, right? I only trade when stuff like this happens. It's the only time I'll trade. You know, that's why I keep an eye out and try to watch everything because, see, that's a clear indication that you're going to short. That's just, and then obviously you would zoom into, you would zoom in on the daily, and the daily would show a little topped out right here. It's a little toppy. One big red candle. Well, we should be pulling back in $16 range anyway, but again, it's short-term trading. So, so that's pretty much it. That's what the video entails. I don't know if you guys have questions. You guys can ask questions, I believe. If you guys are logged in right now on YouTube, you guys should be able to ask me questions in the group chat. But I think you have to be logged in on to YouTube to ask the question. Oh, I think I have it disabled. Let me see. I don't know if you guys can type back, but that's pretty much it. But if you guys have any questions, you know, so far, like I said, this video is just based to explain what the future trading is, because you guys probably heard about it or seen me post about it. You know, and you're trying to understand how these PLs are being made. That's why I created this video. A lot of you guys thought that futures are like options, where actually it's not, because you can actually trade the options to the future contract in oil. So it's very extensive, it gets very intricate, it gets very complex. So each video is to go and you know, it'll get more intense, it'll get more complicated as more videos start to come out. I'll do another video most likely on Friday, and that's where I'll be going live on a Friday's action to close out the week, and we'll just keep it like that. And in the meantime, if there's anything that you would want to see in the next videos, you know, all you guys gotta do is just ask me either on Instagram, or you guys can email me, bouadvisors@gmail.com. And then even if you guys, most of you guys probably have my number that are viewing right now, and you guys could just text me or hit me up on WhatsApp, and I'll be sure to include you know, your questions in my video, my next video. But right now I need to get back to trading, right? So what I'll be trading tonight, obviously my darling right here, silver. I'm going to be trading, I'm going to be watching the ES, right? I'm a prima bear, that's what they call me. Like, I'm a very bearish guy on the ES, but I don't like how it left that rollover gap. So I'm going to be trading the ES tonight. I'll probably take a nice long soon on the ES. Let's see. I'll show you guys. Oh, you guys can see it. Okay. Can you see it? Oh, okay, you can. Cool shit. All right, so I might take a long at the ES. Yes, I might. Jib might actually go long for once on the market. So on the daily, nice little resistance. Nice little resistance right here. All right, so some of you guys might not agree. This is not why I'm gonna go long, by the way. Okay, this is not why I'm gonna go long. I am gonna go long, but this is not why I'm gonna go long. Right? I want to show you guys something. Right? We have to fill that gap. Right? We're not because I'm a believer that we're gonna go. I think we're gonna go as low as here, eventually. We're gonna pull back at least to 1900s, right? But I'm tired of saying it. So this was a rollover gap, most likely. Let me see. This is the 6th, 7th. This is a rollover gap right here, and this is a rollover gap. So let me show you guys. So this is a rollover gap. This is a rollover gap. Okay. So literally 10 points. Right? 10 point swing right here. So we said for every point, so if you go long on the ES 20, 79, 75, to close out at 2089. That's $500 per contract, right? To be honest, it could get a little ugly if we continue to go down, right? There's not much catalyst really here, but so I'm a buyer on the ES here with a stop loss at around 2073 to close out at 2089. So I am long, hold on, execute it. So I am long the ES at 2079.50, a contract long. Swing to 2089. Stop loss set at 2073. You'll see my post most likely on Instagram. As soon as price target hits. And I am flat on silver right now. And gold is holding like a champ. Right, so I'm currently in silver and on the ES. And I'll be most likely staying away from oil right now for today. Even though a long kind of looks attractive for a bounce. Let's look at oil. Joe, are you watching the video? Somebody actually just texted me about oil. So sitting at 28.48, 48.48, sorry. Tired. See what's up. It's probably why the ES is down. This is a beautiful sight. Isn't it? Look at that. Fucking why didn't I do it? Why didn't I take it right here? You know why? Because I'm too busy paying attention to the intraday moves. That's what I was talking about. Sometimes you got to stop, look at the big picture, zoom out, look at the big picture and take your position. That's it. That's what you got to do sometimes. Holy crap, we hit 48.23. On the daily, we're still above the cloud, like David always says. And we're holding. Let's look at the 30-minute, not the daily. Ooh, shit. Telling you, those rig counts will do that to oil. Well, I wouldn't be I would keep a buy order in at 47.85, a buy order in at 48.12. With a stop right here. Oh, my laptop's gonna die. That's gonna be the stop loss. All right, so that's pretty much it. So I'll update you guys on my silver play, in my ES trade. All right, and then I'll post my video out Friday. It'll be a live trading session. I'll be running it live all day, right? I'll probably start running this stream around 9 a.m. In the morning. Now I have the platform up, continuously running for 7 hours. Anything pops up. And again, any questions that you guys want me to implement in the video, always ask. I answer all of the questions. If I don't know the answer, again, I will always find the answer, right? All right, thanks for watching the video.